But there's still so much uncertainty surrounding the trade rift that it's likely months before business leaders have the courage to invest more or hire again. So it's still a headwind in the forecast. I think the real issue for the Fed is both that and whether it's meeting its long-run inflation target, which it isn't quite. So I do think the trade war is still hanging.
You think the Fed should cut rates, Glenn?
I think the Fed, if you go back to the last rate hike was probably one too many, or at least one not quite yet ready. So I think the Fed was at that time balancing risks of inflation breaking out or financial imbalances against downturn risks. I think those risks have shifted, and I think there is an argument for Fed rate cuts in the second half as a precaution. And I think the right hook for that is the low inflation.
Glenn, that implies that it would be maybe one or two cuts. If we're just taking back one increase that went a little bit too far, do you think, and the market has kind of looked a little bit beyond that right now. I mean, how much of a dance do you think there's going to be meeting to meeting here between what the market looks for and asks for and what the Fed is ready to deliver?
Well, I think probably one could make an argument just on economic grounds for 50 basis points in the second half of 2019 as a precaution. I think if the Fed wants to get ahead of the market, it has to tell a story better about how it approaches the inflation target, what its goals are for the balance sheet, and how it sees the economy. After all, there was good news from deregulation and tax reform. The trade war sort of stepped on the administration's own good policies.
Yeah, I'm wondering, Glenn, what you make of this, let's call it a demand. Let's just call it what it is. The market demands, it seems right now, that the Fed cuts interest rates. Is the Fed too beholden to what the market seems to want?
Well, I think the Fed needs to articulate its own economic story. It shouldn't be responding to President Trump's tweets, nor does it have to be a slave to the market. Having said that, the market is telling you something. It is the voice of many millions of real people with real money making a bet on the economy. So it is valuable information. I think the Fed would be better served telling the public and, more importantly, telling the market what it plans to do to raise inflation toward its 2% goal.
Can the Fed be effective in, if they don't cut as many times as the market may want, can it still be as effective by jawboning, doing in some respects what you're suggesting? Maybe you cut 25 basis points in July and then you jawbone and say you're on the case. If things really deteriorate, you're going to be there, but we're just not so sure.
Well, I think you do that, obviously, but I think you need to do something else, too, which is to articulate a story about a longer-term inflation target. So rather than just saying, well, once inflation crosses 2%, we're done, if the Fed were to articulate some notion of there being an average of 2%, that the Fed's willing to let the economy run a little hot to maybe even get a little above that so we average out, I think that's the kind of story that's more reassuring and grounded in the Fed's own mandate.